Welcome to the UK Finance webinar channel. My name is Andrew Rogan, Director, Digital Technology and Cyber. In today's session, in association with ServiceNow, we will discuss what the priority should be for impending austerity. Are partnerships the key to maintaining relevancy in an open finance world? And can the digital divide be closed, including best practice and lessons learned from the upcoming 6th edition of the exclusive Optima study in the UK market? Now, joining me today, I'm very delighted to be welcoming a panel of experts for the discussion. The first is Keith Pearson, Head of Financial Services for EMEA at ServiceNow. Joining Keith will be Mark O'Keefe. Mark is the Founding Director for the Optima Consultancy. Now, we intend to present for approximately 45 minutes and then answer questions for the remaining 15 minutes, but ultimately what we're looking for here is a conversation between ourselves and you, our audience. So Keith and Mark, over to you.
Yeah, and thanks for the introduction. So I think the way that we're going to do this, Mark and I, we sort of talked about it earlier, is Mark would like to cover off some of the findings of the Optima survey. I think it's one of the most challenging and stimulating pieces of work that's done in the industry in UK and I. For me, you know, every 6 months or so, and every time it comes out, there's really contentious stuff about how the various banks are faring in their digital transformation journey. So Mark's going to talk about some analysis on a particular topic. I'm going to talk a little bit about how we see that from a ServiceNow perspective and how we're trying to help our customers and UK financial services organisations deal with that. So without further ado, Mark, maybe over to you to get going.
Yeah, thank you, Keith. Thank you, Rogan. I guess we'll start with a couple of quick questions, really, to gather from the audience. And the first one, really, would talk about how we engage in a digital world and how we engage in an analog world. And how do you prefer to contact a company? Not necessarily a financial services business, but obviously that's sometimes we have day-to-day interactions. But how do you prefer to contact a company? So we've got a few options on there. Many of us had lots of reasons to contact companies. So we'll just give you a moment or two to provide your answer. Fairly straightforward. And that's kind of what we're expecting, I guess. No one's looking to do it themselves, search help or FAQs, all that hard work that goes into organisations providing lots of content, and yet we'd rather perhaps talk, I was going to say, to a human. And that seems to be the dominant answer to that, and we'll explore that a little bit more when we explore what's happening with service. The telephone is quite hard to sometimes get hold of people, and that leads us to our second polling question: how long will you wait for an answer or be on hold? So 5 minutes or under, 5 to 10, 10 to 30, up to 60 minutes, or however long it takes. How much patience do you have? So again, we'll give you a few seconds to answer that one, and we'll return to these when we go through the content. Okay, so that 10-minute threshold, maybe 5 to 10 minutes is dominant. No one's going to wait up to 60 minutes. Which again is interesting in this COVID backdrop where resources are finite or under real constraint there. So we talk really about a widening digital divide, and COVID in particular has accelerated a trend that was happening anyway. As Keith so kindly mentioned, we're going to share some exclusive insights from our upcoming 6th edition of the Mobile Banking App Review. We've spent about the last 4 years now gathering a lot of data on the main UK mobile banking apps. We have all of those accounts open and live and transacting. It's not done our credit scores much good in the team here, but we've done that so we can really get under the covers of what the digital service looks like. Alongside that, we capture a lot of other secondary data that we try to sort of piece together that jigsaw, if you like, of this new digital world. Those reports are available to download for free from our website, and we'll share some of that subsequent to this session as well in terms of some exclusive data. So if we look at COVID accelerating and widening that gap, we can see across the recent results from the main banks in the last few weeks, there's lots of measures there about what we mean by digital and what we mean by service. So, for example, we can see, if we look at NatWest Group, significant growth in Cora, their sort of digital chatbot. And again, we can come back and look at that research and that poll in a second to see that customers are happy using technology like chatbots. So, you know, it may have been something that people weren't accustomed to, they didn't want to talk to something robotic. Now, actually, it's a friendly sort of help. It's a navigation through that search and help, and how do I solve the problem I'm looking to cover here. We can also see from Lloyd's Group there, their mobile app users growing twice as fast as their mainstream digital. So we know the mobile device is becoming the tool with which we're expecting to engage digitally. It's the thing we carry around with us all the time, as much as maybe we don't want to. The other trends we see there from Barclays and HSBC is the depression, if you like, on the analog services. So if we look at branch visits for Barclays, taken obviously a big impact from COVID, and digital sales, branch sales from HSBC in terms of the grey there, clearly lockdown has an effect on customers' engagement in a physical world. And we've got a second lockdown that we've got at the moment, but how much of this change is going to be permanent? And we suspect actually that customers that get good digital experience are going to continue using those digital channels. And what does that mean then in terms of how we deal with our digital offering? Now, just picking up what we've seen in terms of App Store ratings and reviews, in particular on Android, and we can talk about Apple as a separate piece, but what we've seen in when we had national lockdown was quite a surge in the number of reviews. And that's a reflection really on customers taking digital services for the first time. And we expect now customers are going to continue using those services. They've found a digital alternative to what was a previous physical or telephone experience. And actually, if that's successful, they're going to continue to use that digital service. So we think that the COVID, that acceleration that we've seen, not just in banking, but in our use of e-commerce, our use of apps, our use of chatbots and the like, is going to be a permanent change. In fact, the webinar we're in right now, this virtual world, is a change from our physical. So these trends are going to really just cement what was already a significant amount of digital growth. Keith.
Yeah, thanks, Mark. And I think that idea of the digital divide and the inability, the difference between the organisations that can provide that service in a rapid way and an integrated way, and the ones that cannot, I think from our perspective is just widening all the time. And my thinking on it is that I think we're at a tipping point. I think we're going to get to a point quite soon where the ones who are behind are not going to catch up, because the ones who are in front, they are. It's better to serve customers. It's quicker to serve customers. It's easier to acquire customers, and so you really start to see that broadening of things. But why does that happen? Why is it that one organisation can accelerate their mobile and digital capability and another struggles to do it? Well, from my experience over the last 10 years or so, it's a thing that I refer to as fragmentation. And there was a piece of work done by McKinsey last year that suggested that 90% of digital transformation initiatives in financial services face challenges, and 25% failed completely. And if you think about that, 1 in 4 initiatives that you start completely fail. And I believe it's because of all of this fragmentation. It's fragmentation of data, tooling, workflow, risk, control, insight. It's so hard to get your architectural head, if you like, round the entire perimeter of a major bank or even a significant bank. And as a consequence of that, initiatives start in silos, and things like value streams and customer journeys and so on, and agile delivery models, they help. They start to focus people's attention into particular technologies and particularly delivery, if you like, vehicles. but they still really perpetuate that fragmented thinking. So it's a really, really challenging kind of environment to be able to accelerate the delivery of your technology so that you can have that digital capability, but at the same time, maintain your service position and meet the regulatory objectives and so on. We're going to come on to talk about that. But for me, success comes through seamless integration of systems and people. And again, in my experience, people said that's too much, too big. We'll never solve it all. Don't try and boil the ocean. Don't try and eat the elephant. But unless we have that vision of what a financial services organization can be, where all of its capability, technology, and people integrate as a seamless kind of organism to develop, to deliver the business outcomes and deliver those customer experiences, then we're never ever going to be the kind of optimized financial services organization that we kind of want to be. And from our perspective at ServiceNow, this is a big statement, but this is our strategy. Our strategy is to help our customers drive the financial services revolution. We believe that in 2020, this widening of the digital divide and the fact that we really are on the precipice of the future of the ones who win and the ones who lose, that the difference is going to be that ability to be able to integrate, hyper-automate and transform. And those ones that will win, they will out-disrupt, out-engage, out-evolve and outperform the competition. And really, you'd say, well, what's ServiceNow got to do with that? Lots of people still think of ServiceNow as an IT ticketing tool. But if you've seen what's happened, for example, to the ServiceNow share price, it's rebounded back harder and better than any other major technology stock globally. There are a lot of customers now across the world who are starting to use ServiceNow in a very, very transformational way. So, in an IT environment, it becomes the platform for enterprise technology management. My previous employers, that was the way that we were going there, where ServiceNow really was about end-to-end connection of technology. And so the idea that you would manage the data around the design and governance and lifecycle pre-live, and that you would manage the same sort of scenario post-live in the operations environment on a single platform, integrated to your other tooling, was a very, very strong concept. And the thing about that is that in our 1,000 or so customers across global banking, 19 of the world's 25 top banks, what we've done is we've put a very, very powerful technology in the hands of IT. And I think the organizations who are really getting their heads around ServiceNow are starting to see that they can use that single platform, strong integration, strong workflows, strong embedded analytics, machine learning, hyper-automation capabilities embedded into a single platform to become, something more again. So we've equipped IT and the digital functions with something that's arguably more powerful than the technologies that they're using at the moment to, if you like, to transform the middle and front office. And so we become this platform for hyper-automation, helping business leaders to drive a new operational reality, starting to become more relevant beyond IT, and starting to drive, opportunities and transformations across things like payments and cards. We'll be doing stuff in lending later on this year, but in the risk business, in the security business, in the HR business, and so on, and joining the organization up. And when you start to do that, you start to become a driver for performance. You become, you allow the chief financial officer, you allow the chief operating officer to start to pull the big levers of cost reduction and start to support the rationalization of that supply chain and consolidate, the supply chain environment, make things simpler and bring things together architecturally. And it's for that reason that we talk about ServiceNow as a platform, really going to be one of the key technologies that over the next 10 years drives this revolution in financial services. Mark, back to you.
Yeah, and I guess I just if I can, I just go back to that, because I think that poll result, which is a reflection, I think, on some of that transformation that you talked about, Keith, which is if we think about perhaps how organisations were set up to solve customers' problems or to deal with customers, it was in a branch, it was at telephone, less so email because of the security aspects to it. But what we see now, I think, in this new sort of digital world is actually this ability to multitask, where I might be doing my job in the home office, but I might be on 2 or 3 live chats with different organizations trying to, change my address or do, the gas bill or whatever it is that I'm engaged with. And that's a way that we're used to dealing perhaps with a courier firm that needs to arrange a redelivery. And so in a way, those expectations of service, or those expectations of what we get as digital experience, are set not just by good banks or good financial services organizations. It's set by what looks good in a digital world. If I had a problem with a product and I went on yesterday to Amazon, onto live chat, connect straight away with an agent, very clever in terms of me suggesting the product, it bringing up the order reference. It's obviously gone back to the order system, and actually saying, yes, I can deliver, I can get a new product out to you as a replacement. It'll be there tomorrow. Is it this? And that experience, then, if I've got a problem with my bank card, how do I expect to be able to solve it? Well, maybe I want to be able to self-serve. I want to be able to freeze that card instantly. If I want to order a replacement, do I want that to be a one-button click and do it myself in app, or do I want to have to speak to an agent? So I think this is a really interesting reflection of where service is becoming the heart of the industry, and the heart of I guess the digital experience is service. So if we look at previous iterations of our banking apps, if you like, which is something very close to our heart, it was a digital statement. Several years ago, we'd simply put on the mobile phone, a digital form of the internet banking statement. You could do very little else. What we've seen, and Keith, you alluded to some of the good players out there, what we've seen is that digital service bar being raised. And it was being raised before COVID. COVID's accelerated this, but actually the new kids on the block, these new neobanks with cloud-based infrastructure, with no legacy, have come on and really, set that expectation that customers have of how to do things. I mentioned earlier, didn't I, about freeze and unfreeze card. That's not a technical limitation that was only solved in the last couple of years. That's been possible for almost a decade. But actually it was delivered in a very effective way by some of these new challengers. And now actually it's an expectation that everyone has. And this is where we see lots of things really setting the challenge. You can see from our insight into our previous study, the 5th edition, that we've got the likes of Revolut and Starling and Monzo delivering a much richer proposition in their mobile app. The amount of things you could do has to be because they're digital first. We looked, just as we hit lockdown in March, as our sort of COVID view of hygiene factors to say, if I wanted to be able to deliver service to customers who can't go to a branch, am I able to do that in a digital mobile banking app? And what we saw really was some good performance from some of the high street banks, but a lot of white space down here at the bottom. A lot of gaps, whether that's on the ability to have live chat, which is something we've all said, that's my preferred way of doing things, but actually it might not be offered as service there by my provider. Might I change provider if actually I can deal with my problems, my servicing in a different way, in my preferred way? I've learned that I don't need to go into a branch. Maybe that's really inconvenient now because I work from home all the time. I'm not going to travel in to the branch that was near my office. And therefore, actually, it's about how I offer that service digitally. Now, during the pandemic and in this last 6 months, it's kind of been really interesting to contrast the number of features added in our study. And you can see the dark lines are the traditional providers, the lighter ones are the challengers. And you've seen some really positive steps, actually. HSBC is a big call out, really, in terms of during a pandemic, of actually adding some significant features to their app. Contrast that at the bottom there, we've got someone like Nationwide who haven't added a single feature. Now, you could look and say, well, they've got all the features their customer base needs. or it could be they're focused on dealing with the pandemic. And this is really that challenge about how do you develop and deliver against what you're doing as business as usual. What does that mean if we kind of update that COVID hygiene factors and taking that analogy one step further in testing positive or negative there? So if we look at the positive top half of the table, you can see that impact actually from someone like HSBC. They've not just added sideline features, they've added features that enable customers to deliver things on a digital basis. Now, you might have been surprised to say you couldn't amend the standing order or delete a direct debit in the mobile app anyway, but they've at least filled that gap. But again, the second half of that table, if you like, the bottom half, lots of gaps, some of it from these new challengers who are building out their proposition, but also some from some of the bigger high street banks there or long-standing challengers. That again, if I want to be able to have live chat, can I do that? If I want to be able to search FAQs and help, now to me that would almost be something that should be simple to solve. But actually, and Keith will touch upon, some of that complexity is what causes a problem. How do you join those different pieces of the jigsaw together to solve? And that's kind of a really interesting aspect from our side, that the bar is raised in terms of what good looks like. And Keith, you mentioned sometimes it causes a bit of hoo-ha when we publish some of these results, but we're just looking at it as a customer. Can I do X? I can do it in this app. Can I do it in another? And it's how you maintain that battle and race that we think is going to be fascinating as we come out of COVID, but customers are used to operating now in a digital way. Keith.
Yeah, Mark, listen, I mean, every time I see some of the stuff that comes out of your research, I just think it's amazing. Hopefully other people on the call are enjoying it as well. It does create a real debate, but when you and I started talking, I love the fact that your research is action-based, it's practical, it's people who are actually opening accounts and using these apps that way. So it's kind of unfettered, and I love it. And the other thing that I love about it, and I'll just put it out there, is my sort of previous employer. It's really, really great to see Lloyds Banking Group so high up as a legacy bank, because for me that reinforces a couple of things. One, the digital strategy that bank has had for the last 5 to 10 years, but it's been formalized really in the last 3 or 4 years, is really paying dividends, and you can start to see that acceleration. And as I've joined and come on board ServiceNow and started to take on this role, leading our financial services go-to-market globally now, actually, you really can see the difference between the organisations that have got this in their DNA now and the ones that are still making that effort to keep going. But it really is all about service, and I'll come on to if I don't flick myself past it, I'll come on to our platform again. There's a reason it's called ServiceNow. It's been hidden there in plain sight for the last 15 years as we've gone from startup to hyper growth juggernaut, and it's the fact that at the heart of the ServiceNow platform is a services-based architecture. When we were deploying it into Lloyds Banking Group, we really looked at the concept of how do you build a services-based data model at the heart of the provision of the platform, and that would connect your infrastructure components, your application components, into the business services that were actually being delivered by the bank to its customers. And when you do that and you have that sort of service catalog and service architecture at the heart of the platform, it means you can start to build capability that orbits around that definition of service. And so from our perspective, as we continue to invest in our platform and build out new products and new areas, and I'll come and talk about those, in the next section, we really believe that what we can do is start to connect and enable the front, middle, and back office to join up. That ServiceNow can coexist with the digital channel on the front end, so that customer contact centres can start to get that benefit of integration and consolidation and connection into the digital front end, so that the customer, regardless of the channel they come in through, everything is integrated in that channel. They can go to the branch, or they can pick up the phone, or they can use the mobile device, and the experience is seamless and connected, and everything is being updated real time. But then, when there are issues and people do have problems, today, if it's a payment, for example, if I try and pay you £100, Mark, and it leaves my mobile account or my mobile device, and it doesn't get to yours, where's it gone? Well, how do I go and find out where my £100 is gone? How do you find out why you've not got it? The only way to do that today is to walk into a branch, or is to actually pick up the phone. You can't interrogate and investigate that particular piece on a mobile device. And so the case that's created there in a fragmented organisation, it goes through multiple handoffs, there's a lot of failure demand in the process, nothing's connected and nothing's integrated. And what we've started to do is with that sort of provenance that we've got as a platform in the back office, in IT as the kind of platform for technology management, we've expanded out into those operational support functions and helped customers to join those up and integrate those. And of course, now what we're doing is we're moving into the operational servicing areas and into that front line in that customer channel and connecting the whole thing up. So, when you look at one of the big target things that many big banks have been trying to get at over the last 10 years is the single customer view, single operational view. And we've done so much to try and get to single customer view, single operational view. We've data lakes and data warehouses and all sorts of data science technologies. We've put our hats in the ring on AI, on machine learning. There's so much investment going into these things. But this is a logical and structured way to take the technology you've got today and integrate it in and connect it up through a platform like ours. So it's a more logical, and it's cheaper, and it's arguably a more incrementally safe way of trying to get to that single customer view, single operational view. Back to you, Mark.
Yeah, and I see we've had a question come through about asking, are we seeing similar trends in business or for business customers? And I think that's, for me, it's a great question, and we get asked this a lot, and we are toying with the idea of repeating the study for business, and that's really hard to do, because actually to do it in the same way, actually we need to open the 25 or 30 business accounts, which again is in itself sometimes quite difficult, given in the current COVID backdrop, a lot of organisations have stopped opening new business, partly because of people applying for CBILS and bounce back loans. So it's something that's on our radar. But I do think, and we mentioned this at the outset, that our expectations of service and multi-channel being able to solve my problems are set by lots of good organisations. And in the same way, the customer that may have previously only opened a business account through their personal banking relationship now has a wide choice out there. And I think, therefore, the bar is definitely raised for business as well. If I can do it as a consumer, I expect to be able to do that for the business. So if I want to open a business account, well, you can just check on Companies House and get all my details and open it. Why do I have to make an appointment to go in the branch to do that? So I think the bar is also being raised. And I think some of the capability, I think for me, the big difference or expectation with business is probably that connecting further beyond the organisation as well. So into an open banking, open ecosystem. I want to connect my accounting system. I want to connect other things. And this leads us, I guess, to this quandary, really, of kind of, obviously Zuckerberg once famously said about moving fast and break things. It's not necessarily what we want to do in a financial services arena. And I guess this is really the challenges out there. We've got another poll question for you guys, I guess, is the first one around money. Money talks, doesn't it, especially when we're under intense pressure. How much budget do you expect to have in the next planning cycle to deliver change compared to what you've currently got? So in terms of, a lot of you will be in the final throes of a budget for next year's cycle. how much do you expect to have relative to what you've had this year to deliver change?
Mark, just while we're waiting for those results to come in, just to remind everyone of the ability and capability to ask questions via the Q&A widget down the bottom of your screen. Certainly encourage respondents and people who are viewing this at the present time to put questions to our speakers today and look to engage in the topic.
Okay, so hopefully people will have answered that. Let's see where we've got to. Fascinating. Okay, so again, probably no surprises for people there in terms of the pressures that everyone's under in terms of the impact COVID's had, but actually to deliver change, and we might argue, and sort of Keith and I would probably argue, there's more change needed than ever right now to transform organisations, but there's probably less money around to do that with. And then our final polling question here is maintaining reliable services, so keeping uptime, more important than delivering frequent change and enhancements? So is uptime
it's
more
like
important?
Killer question, right?
Say again, sorry,
killer question. It's the killer question of digital transformation, that one, I think, in financial services.
Right, okay. We were talking in our rehearsal about, we wondered how close to 100 this would be. And I guess, and it plays back in a way to the title of this last section about, moving fast and not breaking things, that, great when you're delivering, a social media app or something fun, something that's not your cash, not your money, then okay, you probably don't mind if it's not available right now. But there is something very different about financial services, and this is the quandary and the challenge that we face. So I want to share a couple of slides to lead us into this last segment, and then we'll kind of open it more generally to the floors and for the questions that we've got, and obviously a bit more discussion of the results with Keith and I. So speed and are we seeing people getting faster? Are we seeing people tread water here? Now, what you see on this chart is so we look specifically at the Apple operating system, the mobile apps, and we look at the number of updates done per year. And the bars you see 2018 and 2019, and the dotted line you see the estimate for 2020 based on the 3 quarters of the year that we'd got through when we cut the data off. So I suppose how you read this, I guess, is if the line's gone above the bars, someone's accelerating, they're getting faster, they're deploying more releases. If they're underneath, if their bars are, if the dotted line has gone below their bars, and this year looks like it's going to be slower, they'll do less. And if they're in line, they're kind of keeping as they are. And we're not saying that, it's really important to do an app update every week or every 2 or 3 days. But as a mentality, as an approach to delivery, we definitely see the challenger brands, these new guys, are in a different psyche, a different mindset that says, I found a bug, I fix it. I've got a new idea for a feature, I'll release it and get some feedback. I'll deploy quickly and frequently. I'll answer and respond to the changing demand that's there from customers. And I suppose if you compare and contrast that, you've got, generally speaking, sort of the second half of the chart here, sort of your mainstream banks that are typically delivering about an app update once a month, which is an improvement from when we first started the study and looked at 2016 and 2017. Or perhaps an app might not have been updated for 4, 5, 6 months. Now, as we've moved on, as a customer is using this, as you saw at the very outset of the presentation, the increase in the use of the chatbots, the increase in the use of digital services, this is my mainstay. I think Lloyd said 25 logins a month on their mobile app. Customers are logging on once a day plus. Therefore, they expect it to work. They expect bugs to be fixed. They expect it to be responsive. They expect it to be quick. And they expect it to improve. If it's missing things that I now need to do in the app, I expect to see that there. And that's definitely a trend that we've seen, which is this sort of this pace of change, this speed of operation from the new kids on the block is phenomenal, and it's really pushing the traditional providers who are having to battle, as we've seen, perhaps less money to spend on change, and millions of customers that they've got to make sure that they can deploy a stable service to. Now, we've got the latest published stats here from the reported incidents covering mobile banking from the FCA. The latest stats are due out, I think, next week or the back end of this week. And again, this is something we track alongside looking at login times from apps to say, well, what does good look like? How quickly should your app load? And that in itself is fascinating. Well, what does good look like? And what you see here is how many incidents have been reported to the FCA under the PSD2 legislation that says this was a major incident affecting mobile banking. And the green shows you an improvement in the last 12 months, and the red shows you a deterioration. And you can see, obviously, on the far right-hand side here, some great stories from the likes of Nationwide and Starling, who in the last 12 months have not had a reported incident to the FCA. In fact, since we've tracked this, Starling haven't had a single incident that they've reported to the FCA. Now, again, Keith mentioned about this causes a lot of debate. Is this people managing and manipulating what they report to the FCA? Possibly, in terms of what determines an incident, but you can't hide from the fact that there are outages, and those outages get more and more noise now because customers are more and more dependent on digital services. So you've got this real tough trade-off that says, and you said it yourselves in terms of responding to the poll there, yes, uptime's more important. So how do you manage that? How do you manage the fact that your competitors and some of these new guys are releasing relentlessly, delivering a new feature, testing it, throwing it out the door, refining it, and away they go and building their proposition whilst maintaining that stability and uptime? And to solve that problem, to tell you how to do it, I'll pass to Keith, who will solve that for you all.
Thanks, Mark. I'm not sure I'll solve it. I'm not sure I'll solve it all, but I'm going to have a blast at it, right? So, move fast, but don't break the bank. If I had £1 for every time I heard that in an 8-year career at Lloyd's. So, that really is the key thing, and I think the break the bank bit is being highlighted, as Mark says, by the expectations of customers, but also by the regulators. Operational resilience regulation is all about the ability to continue to deliver those important business services in the face of unforeseen events. And we've had a year of very, very unforeseen events, and I certainly involved in my role in IT resilience at Lloyd's. I don't think a year ago when we were looking at the operational resilience regulation, we thought that those black swans would be likely to be a global pandemic and a facilities and people resilience issue. But technology resilience is vitally important, and going fast is vitally important. And at ServiceNow, the platform, again, we believe is perfect for pace with control and resilience. And the reason that is because everything's built on a single platform. Everything's on a single code base. When you integrate ServiceNow to something, whatever it happens to be in the bank, whether it's another IT system, or it's a core banking system, or it's a people system, Workday, or something like that, everything that you bring in that's a reusable integration that brings that data into the environment of the platform. And what we've done on top of that core capability that we've built is we've built an enterprise services data model for financial services. So the ServiceNow platform, as of this year, now in the same way as when you put it live and into an IT environment, it recognizes the IT environment. Now the ServiceNow platform recognises a bank. It recognises what a current account is, what payment is, what a customer is, and it understands how that data model understands how those things should be optimally connected together. We've used the banking industry architecture network for that. We've not just made that up. We've used a best practice standard for at scale banking architecture to build our model for that. And then on top of that data model and that single platform, single integration, single code base, we're building capabilities. And the capabilities that you'll know us for, I suspect, all fit into what I call the red box. It's the platform for IT, for regulated financial services. And I'm going to come back to that because that's right at the foundation of being able to go fast with control, and be able to demonstrate that you can go fast with control to the regulator. But beyond that, the interesting areas where we're really starting to expand out, regulated employee workflows, so employee compliance, HR service delivery, things like that, through life management, onboarding, joiners, movers, leavers. But the green box and the yellow box is really where I think the transformation is going to happen. The green box is where our integrated risk management platform sits. It's, as I say, it's all part integrated to everything else, so we can digitize risk, digitize continuous controls monitoring, and digitize compliance into anything else that we build on the platform. So that addresses one of the things that makes financial services organizations go slow, and that's oversight and governance and committees and so on, and the management of risk and the testing of controls, etc., etc., etc. We can digitize that. But the area that I really think is going to drive going fast is our new financial services operations capability, the yellow box. And inside the yellow box, just to touch today on one use case, is that scenario I talked about earlier on where I'm trying to get my £100 to Mark and he's not got it. I'm frustrated. I have to phone the contact centre. I have to go into the branch. In the operational environment in the back office, there's a lot of work going on with these fragmented systems and passing data from one place to the next. And it looks kind of something like this. In a typical major bank, it looks like a number of steps. It's a number of manual activities that people do along that sort of dark, and I know it's difficult to see on this slide, but along those different steps in the process. And you've got the, excuse me, the reason that those different steps in the process exist is because they're connected to different technologies. And those technologies are not integrated. So they're connected to the case management system at different points in the process. They're connected to the core banking system and core systems at different points of the process. And they're connected to Excel spreadsheets and email and SharePoint environments at other steps in the process. But none of those things are connected to each other in the context of the end-to-end process. And that's what's really, really important. So what we're doing with our most innovative customers is we're putting ServiceNow in effectively as the orchestration and integration layer to replace a lot of that technology that's disjointed and make the most of the integrations that we subsequently build into the core banking systems, which of course, because we're in a single platform, single code base, are reusable for every use case, and really automate and streamline the process. So you get to an outcome where the actual pieces of physical work that need to be done by people are significantly less, and you've hyper-automated that process. But you've done it through a single platform, not by stitching different bits of technology like workflow, case management, initiation, RPA, and so on together. In our view, that's not hyper-automation. That's the next generation of automation, but it's not what you get when you deploy the ServiceNow platform. And some of the benefits that we've seen from that have been remarkable. In the customers who are right at the forefront and the vanguard of the work that we're doing in this space, we have seen, in one case, a 1,200% increase in the performance of the process that was replaced. And that was not in a kind of, in a really backwards organization. That was in a pretty capable digital organization that we did that particular piece of work. But I did want to touch, as I said earlier, on the red box, platform for IT and regulated FS. And in my previous employer, this was the strategy. How do we get to the point where there is a single technology platform for orchestration, like a workbench for technology management, so that the concept of the technology service you were developing and delivering, or the application, the software development lifecycle, as it moved through your sprints, and as you moved through towards MVP, you capture data around testing, around governance, around compliance, around all the elements that are required when you get to that cutover point on DevOps. Does the machine allow that technology to go into production? And you have to have all of that data in one place. And the problem is that there are lots and lots of tools being used to do lots and lots of bits of that process. And so if you can integrate those tools with ServiceNow and use ServiceNow as that orchestration layer, it means that by the time you get to the point where the machine needs to make a decision about whether or not the incremental code goes live, you can do that with the confidence to know that the implications of that implementation are there in front of you. And so as you move into the operational environment in that DevOps cycle, the same data is being invoked in the same platform, and everything's being treated as one coherent end-to-end kind of technology ecosystem. And the final bit to bring into that then is my green box analogy, the idea that if you bring integrated risk management in at the same time, and you start to digitize the controls and digitize the risk position, not only do you go faster, but you also are able to demonstrate to the regulator and to the 3 lines of defense that you are doing that in control. You're able to show them where the data is associated with a major change you're going to make this weekend. You're able to show them what you were able to do the last time there was a major outage on one of your critical processes, and you went through and executed on the defect remediation. And all of that was put into the life cycle and put back in as defect remediation into the application before it was released back into live. So we see in the organizations using ServiceNow in this way, we see major transformation in their ability to go fast, but with control and not break the bank. So I think that's us now, and maybe back to you, Andrew, and we're hopefully going to take some questions and have a bit of a discussion.
Fantastic, Keith, Mark, thank you very much for that. We do indeed have some questions here, so let's jump straight into it in the time that we have left. So the phrase move fast and break things is obviously something both Keith and Mark referred to. So a question from our viewers is saying, okay, move fast and break things, okay, but not for production. What innovation collaboration processes are you seeing that could help deliver the best results? And in brackets, the person's put, say, for example, open banking.
So maybe if I could, Keith, I'll let you talk about the technical side, and maybe if I talk about what we see on the market side first. So I think just recently we've seen Barclays partner with Fluidly to deliver with Flux, to deliver digital receipts, and that's a great innovation. It's innovating with a partner, and we're seeing more of that when we look at things like subscription management. So I think we're seeing traditional organizations perhaps say, where is it that someone else has the expertise or the agility to develop and learn and build that proposition out before then partnering and deploying with them. So I think there is a more collaborative approach forming as a result of that, partly also because regulation would say, well, actually someone could circumvent a bank anyway and get the data another way. So I think we're likely to see more of those collaborations, I think, that will deliver as good results for the end customer.
Yeah, and listen, I love your question, David. Right, move fast and break things, not for production. No, don't break stuff in production. But I agree with you. I think you can break stuff in dev, and you can break stuff in pre-prod. In fact, actually, if when you are running those agile scrums and you're running those sprints and so on, if you're not actually pushing the boundary of testing things, test and learn, and improve, you're probably not going quick enough anyway. So, that's the whole point, is you can test and learn. You can make a fast start. You can, learn by prototyping. I've seen all of those techniques used, fantastically. I've seen innovation days used fantastically in sub-prod environments. At our knowledge event every year, there's a creator con. There's an entire 2-3 days focused on people basically using our platform and trying to hack new stuff and build new capability. And a lot of that is financial services focused. So I saw that at Lloyd's. I saw incubation happening all over the place, and lots of things that were tested and didn't work. And actually, the bank learned massive amounts from things not working. You really do. You learn so much more from failure and from always succeeding. But what you do is you go faster, and I think that's super important. So yeah.
Another interesting, I'll just touch upon that we see as well, which is we see good organisations gathering that feedback from customers. So if you go through the app stores, you'll see customers complain about things not working. You'll see them complain about missing features. And actually, some good banks will say, thanks for that, we'll feed that into the pot. Others, those things get ignored. And I think, again, that's a fascinating cultural mentality that says we need to be out there, we need to be learning, we need to be reflecting and moving on. And I think some of the newer partners that you can work with to build some of that capability are already in that sort of mentality.
Let me move on in terms of the question. So a question we've received that says, look, we have just started to use open banking. Response has been mixed so far. Why are there so many providers? And are there any differences like what we can see with the banks and some of those charts that some of those excellent change and assessment charts of banks' apps? Keith, Mark, I'm not sure who you want to take this one.
Yeah, well, listen, I can start. In my experience, open banking, it's taken a bit of time to take off. You need that fintech environment to be, if you like, consuming the APIs. You need organisations that are going to tap into those APIs, and you might not have that. I think open banking is great in terms of federating the value chain and creating, to an extent, competition. But at the end of the day, are people going to take their financial services from, different components at different times? No, there still has to be that kind of overlay that presents that single service environment to that customer, regardless of what it is that's happening that's kind of fragmented the value chain in the background. So I think it's a little bit of that. I think, COVID, I'm not sure this is the best time at the moment for fintech necessarily over the last year or so, certainly. So I think you just see, gradual growth of those things. And I think certain APIs will be picked up, maybe payments related APIs much, much more than some of the others. But I think, open banking for me is a good thing. It drives competition, it drives federation, but there is an argument it could create more fragmentation in what's delivered to customers rather than more seamless capability and more joined up delivery. Would be my view. Mark?
Yeah, I think I'd touch upon a couple. It links to the first point, really, actually, because we see different approaches. So some providers in the market say, do you know what, we'll partner with a technical provider that will do all the connectivity to all the different participants in open banking. Revolut's a good example, partner with TrueLayer, and you now see Revolut, I think today they announced they're rolling it out in Lithuania, I think. So they're leveraging that partner who's got that expertise to go and deliver all that connectivity. And you see others say, well, no, we'll do it ourselves because the standards are there and we can do that. But actually on the proposition side, then aren't building out connectivity to all the ecosystem. They're not doing much with it. So we think, open banking for us, when we look at the proposition, whilst I could link my RBS account into my Lloyd's app or into my Barclays app, all I see really is the balance. I don't really see any intelligence. I don't see it added up for me. I don't see it being combined with budgets. But actually, if I go and use a dedicated AISP like a Yolt or Emma, they're doing a whole suite of features. But customers aren't, customers will come when the propositions are right and the propositions are ready. And well, good progress, 2 million users of open banking. The payments piece, I agree. I think we'll see traction there because there's value in it from the users of the payment side in terms of the merchants.
So thanks for that. I mean, I find both of those answers, the question's very interesting, and the way that you guys are responding to it is equally as important. Let's go a bit more macro now, actually. We've had a question from the audience. It says, look, digital transformation can lead to cheaper, safer models, as you've mentioned, Keith. Where do you think digital innovation intersects with the green recovery and improved financial inclusion? Keith, let me start with you, given the questioner referenced you.
Yeah, listen, that's a great question. So I think there's two things. Financial services organisations have got a duty to the economy, a green agenda and the sustainable environment. They have to do that. So they have to invest their money in organisations who are going to contribute to that. But there's a job they can do as well. And if they can consolidate data centres, if they can start to simplify that technology and that architecture and get it into the cloud, if they can digitise and get us working from home so that we're not jumping into our cars or we're not using public transport and so on, if we're flying less around the world to interact in a financial services community, then they're doing their bit as well. So I'm a strong believer, actually, that those types of things should be accelerated. But in order to do that, you need to understand the cost of IT in the first place. You need to understand the baseline. And I've seen lots and lots of organisations that struggle to get their hands on that baseline cost of IT so that they can start to really make the good decisions about where they're going to invest to get that carbon footprint down.
Mark, your views?
Yeah, if I look almost on what we see on the proposition side, so digital receipts is a great example of getting some paper out there. And again, if we look at the physical card, so actually, if I can deploy instant add to wallet, which some providers do, when I open an account, it can be straight in my Apple Pay or Google Pay or Samsung Pay wallet. I can maybe decide if I need a physical card later. Maybe I don't. Maybe actually I realise I can save that cost. And then we're also seeing things in terms of the carbon footprint. So actually use the data to tell me, am I spending at retailers that have a heavy carbon footprint versus somewhere else? How can I offset that? So again, we're seeing interesting propositions developing in that side as well. So I think consumers will start to pull that demand as well from providers in the market.
All right, guys, last question for today, and I'll ask that you actually keep your answers to a minimum, to about a minute, which will test your summarization skills. But a very important, very interesting one is, look, how can traditional banks compete with fintechs, with traditional banks with all their legacy systems and all their associated baggage, compete with fintechs in the provision of financial services in the way that you guys have spoken about today? So this will effectively account as your sort of your final statements and comments. Keith, your views?
Yeah, I mean, great question. So in a minute, you can, is the first thing, but the time for you to be able to effectively is running out. It is my view, and it's cultural, and it's about your people, and it's about your architecture, and it's about your mentality. And unless the big banks can get their arms around the problem and start to boil the ocean, or at least see where the ocean is, or tackle the elephant in one fell swoop, actually we're going to really, really struggle to get there, because the incremental, fragmented, siloed approach, political, some might say, approach to the way that transformation's being done in big financial services organisations at the moment is wasteful, and frankly, it's in many cases it's not working. So I really think you can. I just think it's about culture, and I think it's about getting that thing together, getting that architectural view, and getting on with things, and delivering value quickly.
I thought I was going to say the same thing. That I was going to say you can't unless you change tack and change culture. And I think the culture is really important, and its mentality as well, and that manifests itself then in the way you operate. So you look at Bow, which kind of still had that harness of of sort of traditional thinking, but yet without some of the legacy systems, but ended up not succeeding. I think changing mentality about partnering. So where is it you can add expertise? Where is it you can add value to the customer? Partner and join elsewhere. So if you don't change that thinking, I think you'll find that you just won't be able to compete.
Okay, guys, thanks very much to both of you. And look, this brings us to the end of our webinar today. So I'd like to thank both of our speakers for an absolutely fascinating presentation, and I'd like to thank everyone who's joined today via the webinar.